We want everything to be easy. Here's the thing. If we're preparing you to think and become your own banker, I want you to stop and consider the kind of commitment that requires. It's not casual. It's not transactional. It's not let me try this out for a month and just see how it feels. It's more like a relationship, a serious one. Think about dating, meeting the family, bending the knee, and asking with everything you got and hoping you hear the answer that you dreamt of. That's the kind of intentionality and long-term thinking that we're talking about here. And when you approach your financial life with that kind of seriousness, with that kind of commitment, you start to see just how rare that is. Will you be mine? Because let's be honest, anyone who's read Becoming Your Own Banker by R. Nelson Nash has probably had the same thought. If this is true, why isn't everyone doing it? Well, let's take a step back. Thomas Edison, one of the greatest inventors of all time, from the my old stomping grounds of Jersey, once said, 5% of people think, 10% think they think, and 85% would rather die than think. Might sound a little harsh, but when you look at the debt numbers in our country, the credit cards, student loans, car loans, and the endless cycle of payments, it's easy to see what Edison was getting at. So today, again, is simple, but not easy. It's an exercise in thinking. We're going to explore how we think about money, control, banking, and ownership. We're going to look at the grooves that have been formed in our mind, those neural pathways, yes, science is involved, that were shaped over years or decades. And we're going to start carving out some new ones. And here's the deal. If it's your thinking, then it's your responsibility. Who likes that? If it's your thinking, it's your responsibility. That means we can give ourselves permission to make mistakes. We can even make suboptimal choices as long as we don't keep making the same ones over and over again. I read something profound last night. If I don't want it forever, I don't want it today. Write that down. That was from Chad Willardson. Let that sink in. If I don't want it forever, I don't want it today. So the real question becomes, how fast can I realign my life with what I truly want forever? Isn't that why you're here? To think differently, to take ownership, to learn how to build a system where money earns money so you're not stuck being the only one working for it? Because at the end of the day, there's only two ways to earn money. A man or woman earns money, or money earns money. And unless you plan on working until the day you die, you've got to shift your thinking. So let's dive in. Let's explore the mindset of a banker, how they think, what they look at, how they make decisions, and most importantly, what they're not looking at, and how you can model that same thinking in your life. So let's dive into this. Where is your destination? Where are you going on this journey? This session is about me answering questions for you. This is actually born yesterday. This was born yesterday in Ask Me Anything. I thought, why ask me anything? Why not ask you everything? And it's about learning and asking you the questions. Write these down. Remember, the more we write stuff down, unless you're driving, don't write it down then. Maybe just talk into Siri and Siri can take a note for you. Because if we're going to become our own banker, if we're going to do the verb of banking, we first have to be our own thinker. We have to thought the thoughts we think and make sure they align with what our goals, where we're going, are destined to be. The average person is trained to do two things: to earn money and to spend money. And man, are we good at it. Put your hand up if you're good at earning money and spending money, but not so much keeping money. Keep your hand up. Don't lie to yourself. Even me with 4 of these systems still probably is more proficient in earning and spending than I am in paying myself. So at the end, we're just hoping that something's left. And we all know hope's not a plan. The banker doesn't live that way. The banker thinks differently. The banker builds systems. And to build systems, you need to rethink everything that we've been doing up to this point. But luckily, it's not that complicated. It's not that complicated. We're here to train our brains. So here's a question for you. Are you in the 5% that think or the 10% that think they think? Do you think? Just yes or no. Do you like to think? And I'm not talking about like what's for breakfast, what's for dinner. Nelson Nash started that book, Becoming Your Own Banker, out with this quote: thinking is probably the hardest work there is, which is probably why so few engage in it. That is from Henry Ford, who I quote every day. I want you guys to start. You can share it in the chat if you want. Some of you won't want to share this in the chat, but I want you to think about how much money have you earned over the last 10 years? How much money have you earned over the last 10 years? Let's say you earn $100,000 a year. Well, that means over 10 years, how much have you earned? You've earned $1,000,000. How much of that have you kept? How much of that is in your opportunity fund or is out working for you where you're earning interest off of it? One or the other, because both are okay. But if you said nothing, not much, then why? Were you thinking proactively as you were making the money or reactively and just kind of figuring it out as you went along? That's what most of us are doing. That's what I did for 46 years. And at times, I find myself still doing that today. So if you haven't done or shifted that frame yet, then it's okay. Just say, I haven't done it yet. But again, we're going to dive into your thinking. Hands back on the steering wheel. That's funny. I mean, don't do that. I get nervous with you guys out there driving and gals driving. So, a revolution of thought. This is again from Nelson Nash. Got to give all homage to that man. He changed my life forever, and I never even had the privilege of meeting him. Nelson said, if you know what's going on, then you'll know what to do. And I started making that the tagline of all my emails. If you know what's going on, you'll know what to do. He challenged us to do what? To think long term, not in days and hours and months, not even in years. He challenged us to think in decades, in centuries, right? 10, 20, 30, 50, 100 years from now. So stop short range thinking. Start thinking about what's actually happening every time we make a purchase, every time we make money and spend money. He wanted us to take back control. Stop paying interest to others. Stop using third parties lending to us. Why did Nelson want that? Put in the chat. Why did Nelson advise with his fourth principle to stop taking loans from banks and paying interest to others? Because did he want it because he hates banking? Maybe a little, but no, he wanted it because he understands that for the last 5 decades, we've been giving away 35% of our earnings to interest, whether it's our homes, our cars, our living expenses. And we talk about this all the time. So who here wants a 35% raise? It's not the first time you've heard me ask this question. I know you guys are all raising your hands. If you're not, maybe you're just feeling a little tired today. You don't want to put your hand up. It's okay. And he wanted you to take back control of all the banking functions in your life. He wanted you to think and be the banker. And we think about products instead of processes. We think about spreadsheets, which are nothing more than a snapshot in time. The only time an illustration that's illustrated out to 121 years works the way that it's illustrated is if nothing changes. That means that you've made every single payment to yourself that you planned on without fail for the rest of your life. The company has delivered exactly the same every year. And most of the time, it's going to be better than it shows if you do what you've committed to doing. But we like to look at processes and numbers and then project into the future. But yet, we don't take the time to look at our habits and our thinking and how that is going to actually have a much bigger impact or projection into our future. And that's why Nelson called it a revolution of thought. He didn't call it a revolution of spreadsheets and math and numbers. No, this is a mindset shift. forever. I talk to Patty about this all the time, and we had an amazing day yesterday. And the opportunity came up at our lunch today because we had no internet, we had no phones, we had nothing. It was like being in the dark in the Stone Ages yesterday. But we had one guy working on installing new internet on the fiber optics. And then we had another guy who was setting up our phones. One was our age, 40s or 50s, and the other was my oldest son's age, like 24, right? And Patty showed them both the book. The older guy, Carlos, all in. Like, tell me more, show me how to read it. Thank you. God bless you. Like, just super excited. And the other one's like, no, I've got crypto. I like to do real estate. I already own a home and I'm house hacking it. And it's like, cool. And I put my money in a high yield and I have this and I have that. And this is what we're going to exercise today. We're going to exercise that thinking. Because I asked that young man, Joe, I asked him some of these questions I'm going to ask you. Again, this is just what we do every day is we talk about our thinking. So some of our ask you anything prompts, we're going to shift this webinar from a lecture. I hope it's not a lecture. I hope it's entertaining to some inner dialogue, inner writing. Unless you're driving down the road, we got a lot of me's over there. I like that. Ask you anything prompts. This is going to be used to disrupt your old thinker, that thinking cap you have on top of those shoulders attached to your head, hopefully, or neck, and unlock some new patterns. So where does your money flow first? When you get paid, you've answered this before, but really think about it. Where does your money go first? Is it going to everyone else? Are you concerned with paying your bills, of being a good boy or a good girl and making sure everyone's paid on time? So it's not late, so it's paid in a timely fashion? Is that your first concern? Oh man, it's that time of month where I have to sit down and pay all the bills. Let's make sure everything's paid on time so we have no late fees or anything attached. Who has you trained there? Think about who has you trained. We're trained by the fear of getting a penalty, a $35 late charge or whatever the charge is. So we pay everything on time in a consistent, persistent manner. And the up level, the optimization, what would it look like if you held yourself to that same penalty? I have to pay Felicia, Ofori, Patricia, Beatrice. You get paid, you pay yourself first. That's what the wealthiest do. Pay yourself first, then make those payments. You know what that's going to do? If you pay yourself first and you find yourself short on some of the other things, do you think some of your other actions may change? Yes or no in the chat. And we're not even to the fun stuff yet. Mentioned this already. If I financed everything, all my purchases, all my vehicles, all my homes over time, it won't happen overnight. You got to build up your system, build the opportunity fund. But if you funded everything through your banking system, and give your banking system a name, let's make that fun. I mean, I'm the Sipple family bank. That's not as fun as it could be, but make your bank fun. Make it something that's meaningful to you. And if you knew that by capitalizing the system, by doing that first thing of paying yourself first, and you capitalize your system by paying yourself first, and you store it somewhere where now you can go ahead and keep the money growing, keep the money protected, and use other people's money, the insurance company, the mutually owned dividend paying company, to finance something and bring back 35 cents of every dollar that's currently leaving your home. That's show of hands who wants that. We did that in our family, $3,300 a month that used to go to the family of Ford, family of Hyundai, family of the water filtration system. And then what would it feel like not to, anybody who's in real estate or entrepreneurs, what would it feel like not to have to ask permission when they're like, hey, you want a loan? Just can you grab your toes for me? Bend over. Can I get some blood? Jump through hoops. Can you jump through the hoop? We don't want to jump through hoops. Don't you want someone just to ask you, where do you want this to be deposited, Mr. or Mrs. So-and-so? Mr. Sipple, where would you like that? Don't call me Mr. Sipple. That sounds like my dad. I sound old. Come on now. And then if you couldn't work tomorrow, have you created a system where your money's working for you, that the money's going to take care of you? Or are you the labor? Are you working for money, or is money working for you? Ooh, I like that one. That wasn't even planned. Are you out there working and obligated to money so you can keep paying other people, or is money working for you so you can do what you want to do? Am I playing the short game or the 100-year game? Am I playing the game that's reactive, or is my game proactive? Am I playing an infinite game, or am I playing a finite game, a game that has an ending? A game that seems to end every month and starts over every month, and it's exhausting. Are you thinking that long term, the 100-year haul? Grateful Dead, great album. Are you playing for that long haul for your kids, your grandkids, and their kids? So that's just to get you guys warmed up. We're just getting warmed up. So let's bring this home. We're not even to the actual exercise part where you're going to have to answer. You don't have to, but I'd love it if you would. Here's how we've applied this in our own life. You know, here's how I was both a saver and a spender, and my wife's been both spender and saver, and we came together and somehow we brought the best of everything that we had learned and we became a wealth creator. We started looking at the flow of our money. We started having a money meeting. And then when we recaptured that money and brought it back to us, we're like, okay, this is cool. Well, how do we teach our boys this? And we started adding in family meetings, and they hear me talking like this all the time. Diego said to me the other day, Jack, you don't think I know this stuff? I hear you for hours every day having similar conversations with everyone. So then we built a policy for Connor. We showed Connor how that policy works. We showed him how much will be in it by the time he's ready to get a car and how much he'll be paying back depending on the kind of car. We've used it to finance business expenses, to pay our tax bill for our business, to reinvest in the business, to go out and go to work for us. So we've went from, right, the building wealth to keeping wealth to creating more wealth. And once you go from being that consumer, that borrower, to a builder, it's about acting with intention. And now I haven't got everything right. I've talked about what I would have designed differently, what I would have started sooner, what I would have maybe held off on a little bit. But the point is there's action, and the action brings lessons. You're not learning, we're not learning anything from getting everything right. From just sailing through life, strolling down the lane, sun is shining, rainbows are just in the sunset or in the distance sitting there, and we're just like, wow, everything's so easy. Easy street. No, that's what everyone wants us to do, that we can just have everything in a click of our fingers. We don't have to think. Everything's done for us. No, you learn through struggle. It's a blessing or a lesson. Look for those lessons. Look for that thinking. That's where we go. So let's get into our game. Let's get into our game, because Nelson's real genius wasn't explaining how you could become your own banker. It was giving us permission to think differently. And you don't need a degree in finance. You don't even have to be good at spreadsheets. And you don't have to be wealthy to start, but you do need to slow down, to think deeply. Think deeply. I saw this one. And I was like, here's your challenge this week. Instead of asking Google or ChatGPT or Grok or whatever AI you're using, instead of asking them your financial questions, ask you and write down your answer and be okay with it. You have to start somewhere. Find out where you are today, because a lot of people, myself included, I avoided finances for 46 years. It sounded like Charlie Brown's teacher, wah, 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 wah. And I thought, I don't need that. I'm good at what I do. I'll show up first. I'll leave last. I'll work hard and I'll be humble. And then I'll be polite. Please and thank you. I'll get my paycheck. I'll put some aside for my future self, and I will go out and do the things I love on my own time. They were never one. It was like living different lives because I was super uncomfortable with money and asking questions about money. So are you willing to start thinking deeply about what you're doing? Because remember, all progress starts with what? It starts with being honest with yourself. Beatrice, thank you for being vulnerable and sharing. So instead of asking someone else or looking for someone else to tell you the answer, ask yourself. You know the answer. You know a lot more than you think you do. A lot of you are here every single week. You guys are rock stars. Not many people are investing this much time and energy to their thinking. And what do we talk about here every week? Our thinking. So let's dive in and go a little deeper with your thinking. But first, before we do that, I want you all to go ahead and smash the like button, subscribe if you're new, ring the bell, because like Connor Patrick likes to say, it might just turn orange. I used to say blue, but I think it actually turns orange. So ring that so you're alerted to new content about our thinking about the infinite banking concept and about inviting the people that you love the most onto this big, big infinite banking bus. There's plenty of room. We have lots of people here. We have lots of people watching after the fact that can't be here right now, but you're here and you're thinking. And in real world scenarios, I'm not going to give you and say it's a right answer or a wrong answer. There might be many levels of your thinking, and your thinking will change. That's why you have to rethink your thinking. How many times have I said thinking? Do you think it's intentional? I do. So being a banker isn't following a script. It's not knowing everything to do. It's knowing how your thinking is, knowing what frames you're framing your thinking in, and being open to possible change. This is when we're talking about the neural pathways. We want our brains to be like putty. I mean, not softened, but we want them to be malleable. We want us to, when something comes, we want to be like water and be able to flow. We don't want to be like clay and stiff and just so easy to break. We fall down once, and we never want to try again. No, we want to be open to what happens and learn from it. So here we go. I've been building this up, building this up, building this up. So here is example one. And I want you all to think about it. And now that you've started and you are a banker, okay? You went from training to now you are testing and you are a banker. A few of you just were approved. Your policies are almost in force. So $40,000 is how much cash value you have in your policy. It's already earning you a guaranteed interest. It's already protecting your family, and you're going to use that same money. You're going to spend that money to do either scenario A, option A, or option B here. Option A, and write these down if you're not driving. Option A is you have $40,000, and that is the money that is left owed on your vehicle. Okay? You have 40 grand left on the loan. It's at 7.6%, and your payment on that vehicle is $825 a month, and you have 33 months left. So you can use your loan to pay off the vehicle. And what would you do? You would direct the money back to who? Okay. And then in scenario B, now, because you've been around the campfire for a while, you understand that we want to find relationships and work with people and do things we know, like, and understand. So now you've been studying, you've seen a developer, a real estate developer who you really like how they do work and their track record, even though real estate's a little tough right now, but you like what they're doing and they've been consistent, and you've heard from others, you've kind of vetted them. And so you have that $40,000 and they say, hey, we need this to complete our project. We need the money for a year. We'll pay you 12%, but we'll pay you monthly. So 40 grand invested at 12%, where you're earning 12% interest and they're paying 1% a month, which is $400. What I want to know is, which scenario would you pick and why? Which scenario would you pick? And Felicia, why? Why would you pick scenario B? And thank you for answering. This is awesome. And I'm going to go through my thinking. It doesn't have to be your thinking, but I'm going to go through my thinking and share why. We got B from LK. Why are we going with B at 12%, earning $400 a month, when if we paid off the loan, we would be paying ourselves back $825 a month? We got a couple B's. And my hallucination, I can't see into LK or Felicia's mind right now, but my hallucination would be that we're looking at the interest rate. We're saying, oh, 12% earned is much bigger than 7.6% paid. Am I correct in thinking that? But what I want you to look at is the cash flow number. Is 825 not more than 2x the amount that you would be earning at 400, right? The cash flow. So if you got $825 a month flowing back to pay back the loan or, to go to your segregated account back to your family, I did the math and that's $9,900 a year. Now, the simple interest on that loan, I'm calling it 6%, would be about 2,400. Another scenario, you're making $4,800 and the simple interest is still $2,400. So in one, you have $7,500 that you're cash flow positive, right? Is 7,500 more than 2,400? And if the answer is yes, why wouldn't you pick scenario A all day long? Because it has zero risk. You've already purchased the thing. If you continue to pay that back, that would be $27,225. $27,225 versus if they extended the need for your principal in option B, you would be making 4896, a little over $14,000, right? Or 13,200, I think, times the 33 months. So A has no risk. So a lot of times this is just an exercise in our thinking. So thank you for playing along. So let's go look at the next one, scenario 2. A lot of times we talk about comparing storing your money in a bank or storing your money in a specially engineered whole life policy. So this is just a matter now. We're all thinking that you guys are Sal or Sally savers out there. You're paying yourself first. You got the message. You're looking yourself in the mirror every day. You're like, I got this. I'm going to pay myself first. I'm going to pay myself first. And then you do it. It's crazy. It's incredible. It's awesome. High five ourselves, pat ourselves on the back. It's awesome. But now, where are we storing our money on our regular basis? Are we storing it in a high yield? And in this high yield, I'm giving you 4.3%. I heard a 4.25 this week. That's the highest one I've heard in a couple of weeks. I've heard as high as 5, maybe 5 or 6 months ago. But today, we're going 4.3%. And you're paying yourself that 10%. And in option B, you're going to store the money in your guaranteed dividend paying whole life policy from a mutually owned company, right? That is growing tax free. So are we storing our money in option A at 4.3%? And let's just call it 10 grand. Or are we storing it in option B in the guaranteed 3.25%? And then why are we doing A or B? Which one would you choose? And do you know why you feel that way? Do you know why you made that decision? John says B. I think Dwayne says B. Felicia says B. How do you guys know it's B? Ruby says B. Man, you guys are good and gals are good. B. Guaranteed plus B, B, B. Okay. Wow. You guys just made my day. You made my day. You are paying attention. That's amazing. So guess what the rate would be then of the 4.3%? Let's assume someone's getting taxed 30%. 30% is what the taxes are. So the taxes on a year's worth of growth in a 4.3% would be equivalent to what? It'd be equivalent to 2.975%. That's right. It almost drops almost 1.4 points, right? 1.3 points and change is how much taxes can impact that growth. So you're actually at 3.25%. You're making guaranteed tax-free away from the government where it's protected in a stable environment and dividends like all of you mentioned. So yes, B is going to be superior. Even if it's at 2%, I'd rather have 2% guaranteed plus a dividend than have it at 4.3% that goes down to less than 3. So again, our thinking is cash storage. Now let's look at another storage scenario. So another one where we're paying our future selves. We're thinking long term now. So we've made a couple shifts. We've done a couple really good things. We're paying ourselves first and we're thinking long term. That's a powerful thinking combination, isn't it? So in this scenario, now this person's earning $125,000 a year. They're paying themselves 10%, so $12,500 a year. And the employer, in this case, matches 5%. So the employer matches 5%. So that's in scenario A, the person, their money that they're putting into this tax deferred vehicle is earning $18,750 a year with the match. Free money. But in scenario B, you're putting in 12,000 and the 12,000 is compounding at the 3.25%. There's no match. You may earn a dividend, but it's not guaranteed. So which scenario are you guys picking? Are we picking option A, putting it into the qualified plan, or are we putting it into option B? Dwayne says B. Ruby says B. You guys love this specially engineered whole life, don't you? So again, even if they took the taxes out every year, that 401k money, if it goes up to $18,750, let's say it earns a little bit more growth from the market or whatever, it's still tax deferred, meaning you're postponing on your taxes. So if that's at that 30% bracket, it's $5,625 of taxes. It almost brings you back down to what the whole life is. And now it's just which one is going to earn consistently, which one gives you more protection, which one gives you more control, which one's not locked up in financial prison, which one is a system that's designed for your life by you and someone who knows what they're doing, hopefully a certified IBC practitioner, and not for Wall Street. For you, not for Wall Street. Main Street, a lot of people like to say. So the banker mindset's asking, when do I want access to the money? Will I maybe need my money during my lifetime, or can I wait till I'm 59 and a half or older? Do I want to have stipulations and rules on the system, or do I want to be the one who's making the stipulation and rules on the system? You know, I was riding in the middle of the road this morning and I told my friend, I love freedom. He said, well, you know, you'll have massive freedom, Jason, if you keep riding so far to the left that you're riding into oncoming traffic. And hopefully Patty and Connor aren't listening right at this moment, but you know, I said, yeah, I love freedom. I love having control over the system, my life that I've designed intentionally. Sal says, why not A? Well, Sal, in A, it's a great question. And thank you for being vulnerable and asking. In A, even though you're getting more growth, remember, you're deferring the taxes to later. So all the growth you get on your little seed, you're going to have Uncle Sam walk in later and be like, psst, Sal, hey, pal, I'm going to need my whatever your tax bracket is, whatever the tax bracket, whatever Uncle Sam needs at that time. And it's tied to the market. Anyone in the market right now? I've had a couple calls with people who, you know, I don't know what to tell them. I don't know what the best advice is, to be honest. If you're losing 50% of your portfolio, that means you have to make 100% back to get just to where you left off. So I think it gets really complicated having other people in control of your money that you're not in control of, that you have to ask permission to use, that you will get penalized to use early, that you have to take required distributions on, that you're going to pay taxes on when you don't know what inflation is going to be, what the market's going to be, what all these things are going to be in the future, Sal. So again, this is an exercise of thinking, but I'm encouraging people to want control and guarantees versus speculation and hope. Again, hope is not a plan. So is your goal growth or control? Maybe that's a better question for all of you. So if today was painful, I'm guessing it was painful for a few of you, and fun for others, this is a space and an invitation to think differently, to stop outsourcing your future to banks, brokers, and institutions. Let's stop making the other families wealthy. Let's start loving ourselves a little bit more. Remember the oxygen mask when you get on a plane, and what they always tell us, hey, when this comes down, make sure you put it on your face before you're saving the elders and the children around you, right? This is an exercise of your thinking, an exercise of, are you following the commandments? Are you saying, I love God first, I love me second, and then I'm going to be better to go help everyone else third? And start asking yourself, if you were designing a system, how would you do this? You know, if you're designing a system, how would you do this? What would the perfect vehicle look like? What would the perfect vehicle look like? Maybe pop that in the chat. If you said, hey, what's the perfect investment vehicle look like? Would you want it to be tax-free growth? Would you want it to be in a stable environment that's been profitable every year over 100 years? Would you want it to be protected from lawyers? I don't know if any of you live in Florida. There is the biggest law firm in the country. There is all the different won this much money. I heard someone talking about texting, walking into a pole, cutting his face on his way to work, and then talking about why didn't he sue the city for putting the pole there. I'm like, no, you're looking at your phone while you're walking down the street. But we think that it's always someone else's fault. No, it was his fault. He's looking at his phone. Don't do that. That's his thinking. But we want that money protected from attorneys. I heard that the other day. I thought, that's crazy. Do we want the money that's growing contractually guaranteed with no change? Do we want to have access to the money whenever we need it with no hoops? Do we want it to be, I don't think I missed anything, right? Guaranteed growth, stable growth, maybe earn some dividends on it. Oh, the tax-free legacy. Do we want our money to pass on without going through probate? And so where can we find this perfect vehicle? Could it all be the same vehicle? Could it have been around for over 200 years? I wonder where it could be. I wish someone would tell me. You guys, anybody know? Do you guys know what this vehicle is? Do you know where I could find this? Do you know how I can implement this in my life? And again, if this was true, wouldn't every American be doing this? So why aren't we? Why aren't we? Why aren't you if you're not? It's beyond the math. It's our thinking. If you're not, maybe you're just not ready yet. So again, what's more fun than putting your money to work while you sleep? What's more fun than imagining as you sleep and dream of the things that you want in the future, that someone is out making that happen while you're sleeping? Man, that is pretty cool. It's like Warren Buffett said, you either learn to put your money to work for you while you sleep, or you will work until you die, till we graduate. Some of you like the gentle, but we're all going to the same place, folks. Let's see. Hi, Connor. It's Connor and his engineered dividend-paying whole life policy. That is awesome. Thank you, Mia Moore. Thank you, my loves, for sharing that. So we're at the end, and I have a few closing thoughts to share with you. Okay? So again, if this is too good to be true, or is everyone else just not thinking? Are we distracted by the noise? I know I'm guilty of it. Squirrel! No, seriously though. What? Who are you? What's happening? Are you committing to your hopes and your dreams too much to bear? Is it too much to want what you want? My question is, if you keep doing what you're doing and expect things to be different in a year from now, what do you think will happen? Will you be exactly where you are today, or even worse off financially? Things aren't getting cheaper, folks, and they're not going to get easier anytime soon. So why not start asking different questions? Again, stupid, simple with Sipple. It's simple, and also paradoxically, not easy. You've seen the cost of not thinking. We have trillions of dollars in examples of what not thinking of what things cost in the long run gives us. If you're drowning in student loan debt, the biggest government asset over $1 trillion, or credit card debt, which in 2024, we went over $1 trillion, stop carrying that 1,000-pound gorilla known as Uncle Sam and his buddy, Mr. Wall Street, on your back. Again, you've given me your most precious resource, your focus, and I'm grateful to serve you. Now your choice is to get off the sidelines or get in the game or continue training so one day you can think differently and start paying yourself first. Or remain in the stands, stay here for another year, and see yourself exactly where you are today because your thinking hasn't changed. It's uncomfortable, but is being uncomfortable for your dreams something you're willing to do? So again, blessed to have all of you here, but my email is jason@themoneymultiplier.com or wowsipple@gmail.com. Either of those and you will find me. So thank you all for being here. It's a blessing to be here every week. Don't miss next week. It's going to be awesome. And I will see you all on the other side. Subscribe if you're new, smash that like button, ring the bell to be alerted for more content, helping you learn how you can take back control of your money and become your own banker. Invite others to the Infinite Banking Bus. There is plenty of room and you will be the biggest blessing to that person's life that you invite. Let them know that they're going to have to thank differently, that this is a process, not a product, a skill. And if you don't know something, give yourself permission that you just don't know it yet. As always, thank you for giving me your most valuable asset, your time, your focus, your energy, your thinking. I'm blessed. I'm going to see you in the next Infinite Banking video where we're going to show you the one thing that you're currently missing in your thinking. I'll see you guys in this next video. Be blessed.